All right. 1, 2, 3. Hey, good evening, everybody. I just want to say what a day we had today. I think a lot of us would probably thought after the we see a continuation of the upside, but now I think everybody's thinking we're back in correction mode. I want to point out something before Rich talks. Despite the bad close, and this is something that everybody should pay attention to. When you go out at a big discount to the S&P cash, the futures go out at a big discount to the S&P cash. I believe they went out at minus 12 points discount to the cash. That is generally something that you don't want to sell. I know there's a lot of momentum traders out there. They see the S&P crashing late in the day. They want to come in and they think that they can sell like into that weakness. But when you have those premium levels like that, it makes it very, very hard for the futures to go down, at least initially. Now, I don't know that that's going to be the case in the morning, but I went long the S&P and the NASDAQ right on the close, the futures close. Now, we all know that we're in tricky times with these markets, right? I mean, nobody's getting a free walk through the park. And as I've been saying all the time throughout the last 3 months, 3 months, that I think this volatility that we're seeing is just going to continue. I don't think there's going to be a let up in any of this. While volume may drop, I don't think that what we saw today is going to, there's going to be more of that. And really, what I call these mini flash crashes, and we're tending to see more of them all the time. And I think as the summer rolls on, it's going to get more volatile. And then when you go into the fall, it's going to even get more volatile as we get closer to the election. But what we want to do to talk today about is April and how April ended and some of the stats that Rich grabbed. Now, again, here's the thing about the type of work that Rich does. He gets so involved in his work. Sometimes I like giving Rich queries. I mean, you have to test him. He can't code and do all the things he does and then know exactly what to look for all the time. And today, I'm not going to say that he didn't look through everything, but after the close, we got a little better look at it, right, Rich?
Absolutely. And I had actually looked at a lot of that stuff, but we'll look at some of what I was looking at.
Okay, well, you take it over because I don't. I'm gonna hop off and you take over.
Well, if you want to interject anytime to ask a question or to clarify things if they aren't, Danny, because we already talked about this, go ahead and do so.
All right.
Let's see. I want to present my screen here because that will be what we really want to see here. So I think I just click on present. I can get this down here and share screen. So I'm going to go here. 2 monitors. I just want to share one monitor. Sharing screen is easiest with 2 monitors. Share screen, and let's see if they let me check. This is select tab. Let's see, window entire screen, and I want to share this one right there. There we go. So, as Danny said, normally I look. I've written the program to. I was looking at the first 3 days of the month and the last 3 days of the month, and I changed my program to look at the first 5 days of the month and the last 5 days of the month. And sometimes I code things and I look back and I say, oh my God, how did I do that? I'm amazed at what I do sometimes. I really am. But this is something that I did the other day, and I'm like, sorry. Can you see that, Danny, up on my screen? Okay. And what this is the last day of April for the last 16 years. And what it shows is that April was up 5 and down 11 times in the last 16 years. So here's the up change percentages, and here's the down change percentages. Well, you can see here just in 2022 it was down 2.74% on one the last day, and here a couple of years before that, in 2020, it was down 1.45%. Well, I don't know. I guess I just kind of let that get by me, and it wasn't really, I really didn't catch it. And it's actually happened that, today we were down 1.57%. So we've had a couple of those days, even, now in the last 5 years, there's been 3 times when it was down that much. That's quite a bit. And if we go back here to 2009, there's another one that was 1.72. So we have had some big days. I'm kind of, upset with myself that I didn't really, that just didn't catch. And one of the reasons it didn't catch is because I look at every single month. I have statistics on everything. Let me grab this real quick and you'll see what, I'm going to spoil people here a little bit, but let's go here and look at April returns. I have all kinds of data on every month, and I'll just scroll down here and we will look. And let's see, April right here. I want to make sure I got the right thing here. Okay. So I think what Danny had said, somebody said that, this was the worst April in the last 22 years. Well, and we were, I think I had this down. Let's see if I kept that open. It's 4 point something percent. Here it is right here. With today's close, and it was 50.35.69. It was down 4.16% for the month of April. And right now, with that close, let's see, I can put this in here for 50.39.69, 50.39.69, 39.69. So that means we're still up 5.66% for the year here. But anyway, that was, I went back and looked, I guess I can close this. I went back and looked, and, on a percentage basis, yes, it was the second worst one since 2000, or 2002, where we were down 6.14%, but it was actually in the top 5 for the last 54 years. So, and we can go up here and look there, top 5, the next one, we had one at 3.91. And then after that, and, it was, which is close to 4%, then 3%, a lot of them 2.5, 1.4. Well, I guess and this was the bear market year a couple of years ago in 2022, we were down, that was a big down, 8.8%. That may have been, that was the second worst down April. And when I came in this morning, I was thinking, oh, April's, April, I was expecting April to be down a few percent, maybe. And actually, the way I looked at the data model that I made, I only gave April a 30% probability back at the end of March. I gave April a 30% probability of being down. And even if it was down, I didn't think it was going to be that much, because April is the best month of the second quarter. So now we've got 2 more months ahead of us that don't typically perform as well as April. And up to this month, April since 1970 has contributed 806.82 points to the index. I'll have to figure out how many points we were down this month exactly. And, I think, well, let's go look real quick. I'll just give a quick guesstimate as to what that was. Oh, come on, back over here. 4.16%. Oh, 218 points. So that's going to be 218 points off that. So now April has only contributed 592 points to the index, to the total points in the index up to now. So, as I say, I didn't expect that. April's been positive for, the month of April has been positive overall, even though the last day has been kind of bad. In the past 5 years, we've had a lot of nice Aprils. Here's 12%. Last year 1.46, 5. I didn't think it was going to be that much, but I still thought it was going to be an up April. So that is why I was thinking they could pull this out of the out of the hat this morning, and I didn't look at this, and then I kind of I actually bought call spreads a couple times on the way down, and then I didn't do anything for the rest of the day till I bought a few calls at the end of the day because I still expected some kind of pop back. Never happened. So I was totally wrong. But once again, because I bought spreads, I didn't lose that much. I mean, I lost 7.25 points on buying 3 different call spreads. The 3 call spreads per unit, 7.25 points, which is, I mean, you lose that much on a futures trade. So, and I was looking as though it might have been down, but we were down this morning. I thought they'd come back a little bit, and I thought this might have been the exception to the rule. The other thing that I looked at then after the close in looking at this, I took a look. This is since 2008. I took a look at how many days have been greater than 1.5% lower on the day. And that has actually, there's only been 305 days where we've had greater than a 1.5% down move. And what happens the following day, you might ask? Well, good question. I think I'm covering this okay, Danny. If you have any questions or any comments, please interject.
You're doing great.
Okay, thank you. So anyway, with this 1.5% down days, there's been 305 of them since. Well, now there's been an additional one since 2008, which is when the study starts. So what happens on the following day? Well, I've done this is when this day is down. The following day, I've done this is conditional formatting to see what happens. So I can look and see how often the following day is up. So we know it's been down 305. And the following day after that has only been up 159 times following a down day. That. And then I can go back here and we can look to check this. There's probably been a couple of unchanged days, but I'll clear that filter out and we'll look at the how many times the following day was down. And right here, go by color. Right here, it should be just the opposite, less unchanged days. 143. So what did I say? What was the other one? Was and anyway, that's the other thing that I was looking at. I want to go back to this following day being up because I found something else that was kind of interesting. And I guess, should I spoil people, Danny, and give them what I'm looking at? The other thing I looked at was what happens when the 1.5% day happens on a Tuesday. So I can look here and see when it happens on a Tuesday, like it did today. That actually happened 57 times. That on Tuesdays you were down 1.5% or greater. And then following that, how many days were up and how many days were down. So right here, we'll look at the up days. And there you have it, 31 times out of those 57, it was up. So it's about, if I do the math real quick, it's about 60% of the time that the following day was up when it's a Tuesday, going into a Wednesday. So I can also go back here and take off some of these filters again and look at this. I can look at like the amount of days that this happened in April. So we can just go here and look at April events where it was down 1.5% since 2008. Let's look at that. And There we go. It's only happened 15 times in April. And when it's happened in 15 times, with those 15 times in April, doesn't look like it really matters. When it's happened in April, the following day has been up. Now, some of these days were in the middle of April, a couple of them were at the end of April, but the following day, when it happens in April, looks pretty unanimously to be up. So I guess I gave a real spoiler away there. So that is some of the stuff that I look at. Although I'll have a better idea about, I'm gonna take a look at how it trades overnight and how it opens in the morning, to have a better idea and feel for what my expectation is tomorrow, whether it's going to trade lower first or whether it's going to trade higher right away, gap up or gap down. I have all that data built into my programs, and I'll look at that stuff. So the subscribers and people in my room will talk about it in the morning, and we'll have a real good idea. I mean, obviously, it looks from the conditional formatting that it should be an up day, but we'll know whether it's going to, how many of those days started lower, how many of them started higher, how many of them started higher and moved lower and then went back up, or how many of them started lower and just took off, or how many of them gapped up and just kept on going, or we'll have a real good idea about what happened. And I also will do that along with the formatting that I do. I look at, I have the first 5 days of the month programmed in. And as I say, I have the last 5 days of the month programmed in. So I can look at every month. And actually that's I have it in this database and my bigger database. So I can look at it all the way back to 1970 if I want to. My big database goes back to 1970. This one that I use for all my statistics and more intricate statistics, I only go back to 2008. A couple reasons. First, it was more electronic trading then, and it was the financial crisis, and I think the markets kind of changed then, and the players changed, and so that's why I look at things only back to 2008, and I think it gives me a pretty good feel for what's going on there. So, Danny, does that cover everything that we thought we wanted to say? Do you have any?
Well, yeah, I do have a couple of questions, and I would implore people that are listening that if you're trading right now, don't hesitate to ask a question. I mean, that really. Anyways, my question to you, Rich, is you were pretty adamant about, well, like you said, you're surprised that the S&P went down this much in April, but you've been adamant about the S&P not going back to unchanged on the year.
Oh, no, not going to lower on the year.
Or lower on the
year.
No
new low this year. The low for the year is in. They could go lower on the year, but not make a new low.
Okay.
See the difference?
No.
Well, the low for the year right now, is I think I have it right here. Well, let's go look at it. I can look at it right here.
You're saying whatever the low is, it's not going to go lower than the low.
It's not going to take the low of the year out. And so the low of the year right now is back here. Here's December. Here's January. Here's the low of the year right here. I think this is it. It was made on the 5th of January. The low is 46.8211. That low is not coming out. That's what I'm saying. The low of the year is in. We may trade lower, and we're going to have down months. I've always said we're going to have down months, and we're going to have several down months, up and down. I think it's going to be like I said it earlier in the week. I think it's going to be like a pinball hitting the bumpers in a pinball machine, going back and forth, up and down and crazy. But I don't think this low here is going to be taken out. So we could go lower in here, but this with the studies that I've done, I'm very, very confident that that's not going to come out.
All right. Well, one other question.
Go ahead.
We obviously traded through 50 the guy, and I guess the next line of support comes in at 50 even. where do you see, like, if we start to go down again, where do you think we could go?
I think we could go anywhere in here, but I mean, here was the 2023 close. I doubt we'll go down. I mean, we could go down there. I don't think we're going to take the low of the year out. Could we take the close of the year out? Maybe. Because if you even look at this chart, I don't have. I mean, I have more levels than what's on here, but this is a stripped down chart. But I still think there's not much in some of these areas. So could we bounce down to here? Yeah. The other thing I want to do, and this is I've told you that I'm looking forward to eventually building a data base that this is the 28. We were up 28.29% from this October low to this high, and this is only the third pullback we've had. I mean, we had this 2.32 pullback. This was I don't even call that a pullback. I barely even call. I mean, how can you call a 2.54% pullback a pullback? This pullback from right up here down to here was 5.91%. But I want to build a database where I can go back from 1970 forward and look and see how many pullbacks we've had like that, and what the duration of them is, and how long it takes to regain, and when they happened, and I will build that at some point in time later on this year. Like here was 2022. We had this run up here of 20.96% and then a 10.92% pullback. And I've got a few of these mapped out in here in a couple places, but just looking at that. And this up here, there was a little more give in here, and certainly when this was going down, I mean, they had some big pullbacks back up, comparatively speaking, before they turned around and took off again here. So eventually, at some point in time this year, I'll get to a study where I can look at bigger patterns like this and see how big some of these pullbacks were and how long the duration was before they took out the following high, and it'll be a little work, but I'm absolutely going to do it, and then I'll be more confident about saying what I'm saying now. How often were these like a 5.91% pullback? How often was it exceeded? How often was it 6? How often was it 7? How often was it 8? And even 10. And then how long did it take to recoup that down move? So
hey, Rich, Jeff Davis has a question for you in the chat. He's asking any shot on when down over 1% in front of a Fed day?
That is a fantastic question. Danny, I think you asked me that question today. You asked the same question.
Yep.
How often has this happened in front of a Fed day? And I actually have a program where I call it my event day program, where I look at event days, PPI, CPI, GDP, FOMC, quarterly expirations, and I have all those days in there. I haven't looked at it today. All I know is that I do horribly trading those FOMC days, so I'm not going to trade tomorrow.
You don't ever trade them.
I do less and less because I think today. One of the reasons I don't like them is that people in Washington, like some of the congressmen and senators and people in the cabinet, they get that information like before it's released to the public. So you can't tell me that somebody's not trading on some of what's being said. We don't have the best seats in the House, so we're not on the top step.
No, we're not.
We are not on the top step anymore, Danny. So,
no.
So I'm, I will look at that. It's going to, I have to bring up that program, and I'm
Well, would you share it with Jeff? Would you email it to him?
if you get his email from him, I'll see if I can I'll take a look at it.
All right.
Here's the thing about it is right now, I've been reworking my programs just so like that other program I was showing you that I can show what the following day is just by conditional formatting, and once I do that, I've actually rewritten a couple of programs, and that event day program I haven't rewritten, where I actually can look side by side, the prior day, the day of, and the day after, and have all the stats in one line and look across. Right now, I have to like find the day that it happened on, and then open up the spreadsheet again and go look for the day after. And it's just the way, because of the way I've done things. But as I say, I've been rewriting my program so I can look at things, for 4 or 5 days in a row and don't have to do it the way I'm doing it now. And I will absolutely have an answer for that. I think I have. Well, I have all the Fed meetings going back to 2008, and that's actually it's really simple to do that, because all I'm really doing is adding a date calendar to the spreadsheet. So to look at past dates, but as I say, right now, the way I programmed originally, I wanted to know what happened on the day of, and I had what the following day, whether it was up or down, but I didn't have all the data in it. And I'm rewriting, in the process of rewriting my base programs, like my event day and my gaps program and my range programs, where I can look at like 3 or 4 days in a row, even when I filter them. So when I filter them, it doesn't matter. It still shows all the data from the previous and following days.
No. Now, one other question. Late in the day, you put up a graph.
My data bar graph.
Yeah, and I would say that's probably. I've always thought I traded the closes really well, but recently, it's been very, very hard to predict the closes. And as we talked about, whenever you pull out that graph and you say, and the markets, I mean, obviously today the markets were weak, but it was the last trading day of April and the markets were down so much. There was kind of a feeling maybe that the markets would bounce a little bit into the close.
And actually, let me look for this VDB.
But anyways,
I'm going to go in here. I'm going to show you a couple of these real quick.
All right. But anyways, to the listeners, DVD is something that I've learned not to mess with. And I say this as seriously. And even the Pitbull, Marty Schwartz, says the same thing. Even when the markets were up throughout the day and firm late in the afternoon, and we're waiting for the imbalance to come out. Now, obviously today, there was a big sell imbalance that helped push things lower, but you had a lot of combinations going on. But you came on, and I think we were trading.
Well, here's
50-80, 50-85, 50-90, and then you put this graph up.
Oh, hold on. I'm grabbing the last 2 or 3 of these that I have. That was here. I can go back and see what the 525, 315. So here was let's just go back and look at some of these and see where this stuff closed real quick, if I can.
But anyways, he came in and he put the graph up and said that the S&P could drop to 80, and then he said no, it could go to 75, 80, right? No, we were even trading higher than that.
Well, and hold on one second. Let me just go here, and this is. Let me just put this up here and I'll show you how these VDBs work. So what the VDB does, and it only works on expiring option days, the 0 date options. Here's the let's see, this is from 425 last week. So 425 last week, the settlement price was right there. The close was 50.48.42, and 50.48.42. But one of the things, like when I look at these VDB graphs, it actually settled up in here, 50, 48, 42. This was the max pain point, but these are what I call ceilings and floors. And there was, when you get that out, and I think we may have been trading above there at one point in time. I said, there's no way looking at this graph that it's going to close above there. It's going to come back down and close below there. So there's sometimes it doesn't necessarily go back to the pain point, but if it's above there, it will probably go back below there. And, and then a lot of times it does work back down there. And same way if it's below here and you have these in certain graphs, you can kind of tell. This is one of them where you could clearly tell it's not going to go above 50. And what did it do? It settled at 48. Let's get another one. I think this was the 26th. That was Friday, wasn't it? Friday. Let's see. So that 26, the close was at 50.99, 0.96. And actually, I do remember that we had been trading lower Friday, and it came back. And and once again, this was a floor in here. It got sucked right back to this level, and it was only 10 points away from this. And I do recall we were trading lower, and I said if it really gets carried away, it could go if it was down there. But it's like the tractor beam from the Starship Enterprise. It just pulls it to these floors or ceilings or the midpoint. And then yesterday, I think I have yesterday's here. Let's look at that. That was today's, and let's see, yesterday's was right here. Let's go here. Yeah, this was yesterday. And yesterday, where did we settle? We settled at 16.17. Once again, it just, less than 20, right above this point. I mean, when you see these, I said yesterday, it'll settle in between here, and this was the max pain point, 16.17. I mean, it just, and sometimes, when I first run these, sometimes I run them a little earlier, like I'll run one at like 2:00 or something like that, or 2:30, and definitely by 3:00. But if you are trading far away from these points and you have like, an hour to trade, it gives you an idea that, hey, if we're trading down here and you got an hour left to go, it's probably coming back up here. If we're trading up here at 35 and you got an hour left to go, it's going back down. It's probably not going to go higher. So it definitely can give you an advantage. Today it did not. We were trading above this. Let's see. We were trading a little higher at one point in time, and then we were trading. I think right towards the close, we were actually. Let me go here and see where we were. I'll go to this 5-minute bar because it really spilled in the last few minutes. Let's see. This is as soon as this opens up right here. Let me go here and reset this. Go here to right here. Come on. Reset all scales. We were actually trading at 64 in here. Let's go here. And I actually thought, because we had this here, we were trading into a gap from, back over last week. And we were trading at 64, 65. I thought it would probably go back up here to 80 because that's usually what it does. This is one of the rare cases where when it gets going, it didn't do that. We were trading right here until 10 minutes before the close, and then it spilled. And that does happen, but it's really rare. I think this is only the second time that it's happened this year. And
wow.
Yeah, I can go back, and as I say, I save these things. So I can go back and look at any date and see. I mean, I've got these things for like 2-3 years back, and I look at them. There's a couple guys in my room that look at them. Bruce is particularly good at deciphering what's going on there, but
is he better than you?
In some respects, I think he is. But you know, it's like I don't mind that. I know that with my work, people are going to see things that I don't see. I mean, I can't see everything, and I encourage people to like look at this stuff and say, hey, you know, I see something different happening there. As I say, you know, I did this one at what time did I do this? I did this at 3:09.
Yeah.
So at 3:09, I'm going like, well, we're trading right here. It's probably going to go back up because, you know, or no worse, no lower than this in here. And that's another thing that I've noticed, that when you get these indentations like this, it very, very rarely goes beyond an indentation. Usually when it slides down like it did today, you have a more uniform profile like this, you know, something like this, because you get an indentation, you know, following one of these big ones, it was an extremely unusual event.
Well, let me ask you a question. Would this be a great tool for people that like to trade the zero dated options?
Well, I mean, I think you have to be aware of it at the end of the day. I mean, because you know, when it's all said and done, if you have an idea about where it's probably not going to go, and I could show you, we could march through 30 of them. And in fact, and somebody pick a day, and I can, you know, I would in the last this year, pick any day you want to this year, and I'll pull the graph from it, and we'll see what it looks like and see what it closed at. Anybody got it? Danny, you pick a day.
What's that?
Pick a day, and I'll take a look, and any day you want to pick. I just had, and I will go look at the VDB graph that day, and let's see where it closed.
All right, the March, the end of the March expiration, the last trading day of the March expiration.
So that would be March what?
It'd be the third week in March, right?
Third week in March. Let's see. So March, well, what's the exact date? 19th, March 19th?
Yeah.
Okay, let's just go to March 19th. That sounds about right. There's March 19th. There was the data bar graph. There was 60. I don't know where it settled, but you know, this is one of those unusual things. The options expirations sometimes have some funky stuff going on, and I don't know where we were trading. Probably no way would it. If I looked at this, I would not expect it to settle above 75 under any circumstances, and probably not below 30. And so, and I'll just go look and see where it settled there. That's March 19th, and this was done at 3:08. So I'm saying that it probably settled someplace between 65 and 50, but it may have been a little bit lower. But let's take a look. March 19th. Let's see. Go to 319.204 right there, and there we are, March 19th. And March 19th, the cash settle was 51.78.51. 51.78.51. Nope. I was taken back. It settled right here on the high. You know, between
how about the last trading day of March?
Oh, so March, that would be March, let's see, 322.
Or is it better for like is it better toward the bigger expirations and month ends? Or
actually, the month ends are really difficult. And here's why the month ends are so difficult, because the month ends, especially on the quarterly month ends, have a lot of strikes. So it's actually better suited to look at the weeklies, the Monday, Tuesday, Wednesday, Thursday, but not as long as it's not a month end, because those month ends, those are option series that are open for longer, and especially the quarterly ones that are open for a real long time, they have a lot of strikes in them. And they're not as clear cut.
Okay.
And
All I know is that there've been, if I said 10 or 15 times, that'd be a low number. I'd say
Right.
more like 20 times to 25 times this year, where you put this graph up and the markets were trading higher, and you'd say, "Oh, I think the next 10 or 15 handles are going to be down," and I didn't believe it.
all
I
right.
stayed long, and then within a couple minutes, 10 minutes later, the thing's trading down 10, down 15. I mean, there's been times when I've seen it drop 20, 25 points.
Yeah, and it does do that. Let me go here. Let's just here's here's a graph that it's got these high points here and these high points are really tight. Had to settle someplace around here. This was 4.2. Go here 4.2, 4.2, and that's 2024. Enter. Let's go here 4.2. Come on. Did it go there? 419. I got to go back to 4.2. Go to 4.2. Go. There we go. And 4.2. There's 4.1. And here's 4.2. 4.2 settlement price. No, that's 4.3. Sorry. 4.2. Got to go here to 12. And that is, let's see, 14, 15, 16. Oh, right here. Oh, I guess that was right. Settlement price, 52.0581. 52.0581. So kind of right there, but definitely within that. But here is here's the other thing. They were trading at 2 o'clock that day. They were trading down here at it wasn't much of a trade. Trading down at 51.90. So they moved up 15 points. But once again, when you're trading below this, it kind of acts as a magnet to pull it up. And when you're trading above it, it's the same way. Let's see. Here's 315.
Jake says that February 21 was earnings day. He thinks it was NVIDIA.
Okay, February 21. I think I remember it, NVIDIA. Let's see, February 21. Let's go look at that. February 21, 7, 14, 16, 20, 21. Here we go. 21, 304. Right here. Here's February 21. February 21 took this at 304. Let me go to 221 here and see where they were trading. 221, go to 221 2/21 enter, and let me see, make sure I got there. 221 22. Go 221, not 22. Go to 2. Sorry, I didn't change that date. 21 enter. I kind of like doing this. Let's see. Go to 221. Go. Come on. There. Oh, here we are. We're right here. Oh, NVIDIA. And actually, here's the day. Let's look at this 221. Here's 221. And then NVIDIA came out, and this is the SPX chart. So this is the cash, and there it is the next day. So it settled right here on the high. Actually, that settle was 49.8180, and with a 49.8180, okay, that would have been about the max the max you'd think they would go, because looking at this is almost like a ceiling. It was the highest volume bar. So above there, that's when the biggest premium sellers, obviously, they don't let it get past there, just like they aren't going to let it get past these bottom floor ones. So this day it settled up here, but it settled on the high side, which was probably an indication that people thought it was going to go. But here's the other thing to look at that. This is the really interesting thing, is they were trading at, this is a 5-minute bar chart. So right here at 320. At 320, they made the low at 49.46. 320, 49.46. So they were trading down here at 320. And we already knew this was a 49.60 because I put this out at 309. So everybody had this at 309. So you made a new low right down here at 320 at what did I say, 46 and change. So it definitely had some upside to it. But that day, I actually remember that day now that he mentions it, that it just took off like a rocket up to there. But you would have probably expected it to go from 45 to 60 in any case, which is a 15-point move. That's a big move.
Yeah. Now
so,
Jeff Davis came back in. he said that he saw a stat that tomorrow will be up 70% of the time from 1993 to 2015.
Well, I mean, I just showed you what my stats are. My stats said it's up. It's been up every day. If it was a down day in April that large, every time, no matter when it's happened in April, whether it's the end of the month or the middle of the month or the beginning of the month, it's always been an up day following. So I agree with him. The question is, and this is what I will answer tonight for the people in my room, is I actually will look at all those days in April and see how many of them open lower, how many of them open higher, how many of them traded lower, how many of them, before we know they ended up higher, but where did they start from? And I'll look at that tonight, and I'll have it all ready in the morning, and because that's what I do. Let's see. I'm gonna close this stuff here right now. Close this down, and I will. Let's see right here, and I'll just show you kind of what I'm going to do. I'm not going to show you what this does, but I'll show you once. I'm not going to show you the stats, but I'm going to clear this out. And this gives me, this is just general stats, but so we got to go down here, go to there, go to there. Oh, I don't want to go there. I want to go to there. And then I have a lot of stuff programmed in here. Then I want to go to right here. So what I can do, and what I will be doing, is I have all the stats on, once I put in the attributes of what I'm looking at, then I can go say, well, how often was it a partial gap down? How often was it a full gap down? How often was it a partial gap up? How often was it a partial gap down? And then did the full gap fill? Did it not fill? If it did, how far did it go? That's all stuff down in here and below, and I'm not showing that. So anyway, but I have all those stats. So I'll have an idea based on the fact that it happened in April, what we can anticipate with that. So I'm kind of looking forward to looking at that. And I actually have another program that is, I've been working on it for a long time, and it gives me a good indication of what goes on to, I don't even want to, it takes a look at everything that happened like on a day like today, and then it looks at a lot of seasonality things, and everything I have looks that I look at a lot of different factors with everything, and I have the ability to do that. And I'm actually learning to do some programming now that they call them, it's like dynamic array functions, where you can like look at different things, and it dynamically, you can look at different factors, and it kind of blends several different factors in together to like make find out which way, with directional movements and amounts of points that move, expectations for that. And I just keep working on building those models, and hopefully they will. They're fruitful now, but hopefully they'll be more fruitful in the future. I just keep digging and clawing at all the data, and trying to put it together in unique ways. And I've had a couple of people in my room look at some of my data and ask questions, and see things that I don't see, because I've been doing it for a long time, but I don't see everything. And
no, you can't.
People have good questions.
A lot of companies, they have entire research firms, a research department that come up with these queries. You can't code and you can't be expected to hit it all. Not all the time.
Well, I expect that of myself.
Right. I know. Now let's do this. Let's tie this up. Now, we've been talking about, you were talking about raising your rates on your room, and you want to talk about your room a little bit?
Well, here's what I do in my room. First of all, I keep my charts up in my room, and I do I have color coded levels, and every morning in the room, I go over what I see with my levels and the market, and then I have a write up, and I put it in a private Twitter feed, and I also post it in my room. And I post these data bar graphs in the room. I post these studies in the room. I post them overnight. Sometimes, not always, but let me go here, and I'll just take a quick peek at what I have here. Oh, let's see where. Oh, I got to go right here. Here. Hear ye. I want that, and I want this right here. 1 second, and I can go here, and I'll just show you what's in the room. I mean, what's in my website. The room is the room, but here's my website. So when people subscribe, you can subscribe just to get my sheets if you want to, but when you subscribe, this is basic membership. I give a few things away, but this is for people that take the sheets and get into my room. I have these instructions for my sheets, how they're used, and every one of these sheets has a download and a video kind of explaining it. Some of them are a little more lengthy. Some of them are a little less lengthy. This is on my standard deviation levels. On my standard deviation sheets, a 20-minute video, and I think this is I can't remember how many pages this is, but this is and you get a this. I talk about volatility, and that this goes along with the video, and you can download this. It explains how volatility is created with all the calculations, and then goes over my sheets and shows how they're used. So I mean, it's 27-page thing there, and you will understand standard deviations. If you didn't before, you will after you watch that and do that. And then I have range tables and other things, and then color codes, and I have this multi-level standard deviation sheet is actually a tool to do things. I do some studies that I make available. This is market cap by price and movement for stocks and S&P. So it tells you like each stock, how much, what price movement, like NVIDIA will have, what effect it has on the S&P 500 or the NASDAQ 100. And then these were the daily sheets. Every day I put in, this is the Pro Pivot sheet. And so this is what today's Pro Pivot sheet looked like. Gives the prior day's open, high, low, close. It's 4 o'clock close, 4:15 close, daily change, fair value. Got some pivot systems in here, and then
it's great.
This gives the standard deviation levels and points and the implied volatility that I used. And then here's the 4:15 settlement. That's what I measure my standard deviations from. So 1 and 2 standard deviations up, because 2 standard deviations encompasses 95.5% of all events, and 1 is 68.5%. So you know that 68% of the time, 68.5% of the time, you're going to be in between -1 and +1 standard deviations, and then 95.5% of the time between here and there. Today was a very unusual day. Obviously, it was a little bit bigger. And how much bigger was it? Well, they went to 35. It was quite a bit bigger. It was a very unusual day. And then this is just something, keep track of 52-week highs, 52-week lows. And these are cash for the S&P, the NASDAQ, the Russell, and the Dow. Keeps.
But you're also plugging away at doing Bitcoin right now, the bonds.
I'm going to have bonds, notes, Bitcoin, and Ethereum. It should be. I should have it done this by the end of this weekend. I hope to have them done. So there'll be sheets, and they will be sheets like this. Here's the other sheets. This is just one sheet, and then I have these. Let's close this sheet here. Then I have this. This is let's see. There's 6 sheets of data in here, and that's what the other 6 sheets are. Let's go over here. I got to go here. Why didn't I get that right there? And let me go here and pull this over here. Up. I just took this off. I didn't mean to do that like that. Come on. Let me close this and open this up again. Close all tabs, and open this one more time and see if I can get this without doing that stupid stuff there. Let's go here. Damn. Oh, I gotta go here. Here we go. I have it wrong. So these are my other sheets that come out. SVXY, UVXY, some, so in case you're playing, some kind of volatility stuff, SPYs, QQQs, TQQs, TNA, IWM, TLT, TVT. And then this is the open, high, low, close change of those particular ETFs. And then the implied volatilities that they're trading at, and what one standard deviation is, and then what 0.5%, 1 and 1.5 and 2% is, and then 1, 2, and 3 standard deviations up and down in those. And then these are my range stats. I'm actually right now I'm only doing these for the ES, the NASDAQ, and the Russell futures, and they give 30-day average for my open range, and 30-day first hour average, and then 10-day, 5-day, and then min and max, and what the previous day was, and the last 30 minutes, and the post 15. And I'm going to be adding the daily stats for this too, probably in the next couple of weeks. So I'll have, besides these last hour, first hour, which are very important, and that you use these in conjunction when we're in the room and I open these up and use them. You kind of get a feel for what is an expectation of what that range can be, and range expansion. And if you're watching these sheets during those time periods, you can have an idea about you can pick up some pretty decent trades quite often. And I'm going to do these for the bonds and the notes, and probably eventually the cryptos. It's going to take a little bit of work to do that, because I have to, I build a database, which isn't an extensive database because this only goes back 30 days, so it's not a big deal. But I mean, this is for, like, as I say, very short time periods, but you have an idea. Like today, the last hour has been, yesterday, the last hour was $30 and the last 30 minutes was 17. Well, what do you think that last hour is going to be? And that was like the biggest last hour almost in 30 days. We had one that was 38, but today, I mean, I don't know what that was. It was huge, but, so we'll see. So this is another tool that I have, and this is strikes and play. I'm going to make some improvements on this. This is designed, and there's a whole video to show you how to use this if you're going to do option spreads and what it means. I won't go into it now, but it's a really cool tool. And then I also, this is the standard deviation table. Besides having this in the pro pivot sheet for the NASDAQ and the S&P, you can go here and I have it for the SPX for people that trade SPX options, and which I do, and the ES and the spiders and the Qs and NQ, NDX, and Russell, and then the Dow. And I threw crude oil in at the end of here too. I'm going to probably separate that out at some point in time. And then these are standard deviation tables for like, so today was Tuesday. So it's 4 days to the end of the week. I want to know with the ETFs and in the case of the ES, when it came in this morning, what is a one standard deviation move for 4 days? Like the other tables have the one standard deviation moves for 1 day, but what can we expect from now to the end of the week, a one standard deviation move for 4 days? And that's what this table is all about. So if you're like an option player, or even if you're a futures trader, the 4 day 2 standard deviation down move expected by the end of the week was 50.12, and at 3 standard deviation 49.45. Well, our low today was whatever it was. It was I'll look in a little while. I haven't run my sheets yet for this stuff, but it was above here. But and so we'll probably get a little pop back someplace in here. And another way you can tell that is on. Let me close this. Unless anybody has any questions on that. Another way you can tell that is on Sundays. For the Monday files, I make a couple of charts that I put out, and this is looking at this. This is the ES for the week, along with that was Monday standard deviation levels. But these are the weekly standard deviation levels, and you can see them. I put these out every week. I post them at the end of the week, but today. We closed what was the close today in the ES? It was I can go here and look. Hold on.
We got down to like 49, right?
Oh yeah. What was the close though? Do you just I can go in here and look. I guess.
Hold on.
I'll go look because I use a different close than everybody else anyway. Yeah. Let's see. Settle was 50.64 half. 50.64 half. So now let's go back and look at this. 50.64 half. So that's not even though it seemed like a disaster. Looking at this from the standpoint of the weekly open, we're still it's still less than a one standard deviation. One standard deviation weekly move. Right here. So if we pop back anywhere, it's just going to stay in here. And I've been doing this for like 2 years with these charts. I put this chart out every week at the beginning of the week, and then you get it daily. You get the updates like on that other sheet. But this, because people like to look at it, and they will draw these lines on their charts. And I've done a study that shows that my standard deviation levels absolutely fit into the empirical model with fat tails. Fat tails meaning that the markets do tend to exceed this more often than not. And fat tails is a relative thing because in a year, you would expect something to exceed 2 standard deviations maybe once. And to the downside, maybe once too, but in the Nasdaq, absolutely has fat tails. But in general, it stays within like this, and the SPOOS has a fat tail on the downside to a little bit, but not the upside. It's pretty much right there, and it's very rare. Even like last week, which I can show that was it last week or the week before last? Let me go grab this real quick. Go here. You go here, documents right there. ES. Levels from the week ending. Let's see, from the week ending, what was last week? Last week was 422. Let's see. 426. From the week ending 426. Here's the ES from the week ending 426, and maybe it was 419. I can't. Oh yeah, here was the week. I knew it would happen in the last couple of weeks sometimes, but this is pretty typical. Even when they do exceed, especially when they exceed that 2SD level. Here's where the prior week's close was, and here's where they traded all week. This was a couple of weeks ago, and then they traded down, and then they traded below here, and is especially in the ES when this happens, and you're trading here on a Wednesday or Thursday or Friday even, you can almost always expect some kind of move back here. They very rarely close below 2SD levels because they shouldn't. It should be rare. But so that's like an example of how to use these. 90% of the time, I should say 68.5% of the time, you have stuff like this happening. That's what most weeks, in reality, that's the way most weeks are. This shows this big gap up here because I think that was a rollover. So new contracts, so that's why that gap was there, because I do. And then once again, it just kind of hung right out in there. That's pretty typical. Here you open, you trade all week. They maybe trade up to the 1SD level. They very rarely trade past the 1SD level because 68.5% of the time they shouldn't, and they don't. So this is like it's like a really good thing to know. Even when they exceed 1SD level, they usually come back to it. Very typical. And I've got over 2 years of this kind of data, and I've done the study to say that the empirical model with what I'm doing here works. So these are levels that are good to think about when you get up in here. If you have like resistance areas, you probably should think that they will have a better probability of working. And if you have support areas and you're down in here, probably should think that they're gonna have a better probability of working. What was that? That was that. Let's look at it. I mean, as I say, here's another week. They just bang, first one standard deviation up, couldn't get through it. I mean, that's the way this stuff works. So it's good to know and good to have at your fingertips. And when you add the daily standard deviation levels along with it, it works rather well. So,
hey, Rich, let's do this. We've been going for over an hour and 15 minutes. I think you did a great job.
Okay, thank you. Yeah,
like you said, one of the things I want to express to everybody out there, that there's very few products out there where you can get to know the guy, that he's done the work, that he's got a proven track record, that this is going to end up something very, very big when he's done. He's got a new coder going. This is going to be an algorithm, an automated system very soon. This is a great opportunity for traders to gain an edge off of his work. I mean, you use your own stuff. Look at what he's doing. If it matches up, then you know that you've got something really good going. But if you don't have that kind of ability to pull up your own research, this is a great, great thing to have in your pocket. And, what we have tried to emphasize to people is that this deal that we have up, this is a deal that Rich actually canceled. But if there's a few people that want to sign up for this,
well, if they do it tonight, we'll still honor it. But
I'm just going to say that this is not going to be like this. In fact, it's already been changed. So if you're looking for a really good product, I think $300 a month for both my room and his room, it's a great deal. And in most cases, I think that you'll make your $900 in the first day. Like he's very, very good in his morning calls. And what I see, especially in those gap stats, it's not hard to catch on to a gap study that either moves the S&P 20, 30 points or even further on one trade. And as we go into the end of the week, we're going to be, tomorrow we've got the Fed, and then we've got the jobs number on Friday. And I'm sure there's going to be a lot of really big stats coming out of that, Rich.
I already have the stats for how May's Friday jobs number has performed over the past 15 years.
Yeah.
I ran that last week.
Right.
So we got that going. And, I will say I didn't catch today. I was wrong. I bought call spreads, but I was anticipating, I was not looking for this month to end up like it did. I thought
Well, a lot of people thought they were going to bounce at the end of the month, but you said it today. If you had bought the call spread for $7,
oh, right. Well, no, actually, here's what I did.
What if you were right on the call spread?
Here's what I did. I legged in. I bought 3 sets of call spreads as they dropped, like I think about $20. Okay, $15-$20. I bought 3 call spreads. I bought the first ones at 3, then I bought 2 50 and then 175s. And had they rallied back like I thought they were going to rally back, you put out a total of $7.25. But if we'd had gone, if it had turned around and gone back up like a half of a standard deviation, you'd have made $82 for $7. You'd made $82.75, and you risked $7.25. So, but after that, after I gave up and I said, no, I'm not doing anything until the end of the day, when I bought a few cheap calls, because I call them my gamma monsters. That's just one of the things that I love to play. And like I say, even at the end of the day, I didn't think they would crush them like they did. But getting back to that other thing, I felt kind of shitty about like saying, kind of missing what was going on there today. And I really, because I had that study that said today was going to be a down day anyway. I don't know why I questioned it. And
that's all right. That's all right.
But as I say, it was a $7.25 risk for a possible, because they were $30. They were $30 spreads. Each spread, they were $30 call spreads. So you paid a total of $7.25 for them, but there was $90 in potential gains from the 720 from the 725. So that's how, and all they had to do was go up a half of a standard deviation,
right?
And which didn't come to pass. But I'll I live and learn. I've been pretty good lately, and that was. I looked at the risk reward, and I really, 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 even though I knew we were down on the month already, I didn't think they'd add to it. And I certainly didn't think it would be like end up being like the 6th worst month of April in history.
Right. All right. Well, listen, let's tie it up. We know you got a lot of work tonight. What time do you think you'll be done?
Well, midnight Eastern time.
Wow.
So, and I'll take a little break. I actually did a little stuff earlier, and I'm not going to hit it real hard. Ty was here. That's my coder. That he's doing some new stuff for me, and we're working on the cryptos and the notes and the bonds. And I think I'm hoping that they'll be done next week, and I'll have sheets just like I have for this. And going forward, he's going to work for me for the summer, so we're gonna automate. I have 5 different algos that I want to totally, in some way, shape or form or another, automate to where it'll be on my screen, and instead of me manually updating it, the data feed will go into it, and I've written the code for the algorithm, but it's just got to have a live feed hooked up to it. It's not, it's a little complex, but hopefully it'll be smooth. I'm going to start out with a real simple one. And if we can get the simple one running, the other ones are more complex. But the other thing is that they'll free me up in the morning to do more analysis and look at other things. So it's all coming. It will, he's a student, by the way, so he's got finals next week, but he's going to work this weekend some, and then after finals, we'll be really rolling. I mean, I'm going to work him. I don't know if he'll work as much as I do, but he's I have a little story to say. I was really impressed. The first night he came over here to do something for me, we were up till midnight our time, which is 2 o'clock your time, Danny.
Yeah.
And I said, I got to go to bed. I got to get up in like 3 hours and hit it again. You got to leave. And I said, it's midnight anyway. And and we had a little problem and we couldn't figure out what it was. And I got up in the morning. I came back in my office. It was about 4:30. And so I literally slept like 2.5 hours. And
you're not allowed to sleep.
well, but I knew he had a problem, and so it was one day I didn't get my pro pivot sheet written out, but there was an email time stamped at 1:39 in the morning. So he went home, Ty went home, and he worked on it for like, and he wrote with the email, I know what it is, I can fix it, I will fix it tomorrow, and I said, okay, you have to, get out of class tomorrow and come back, we'll fix it, and we did.
Yeah.
And now we're looking, we're discussing about how to do a lot of things, and I think we're gonna get a lot done over the next few weeks. I have no end of work for him to do, and it will free up a lot of my time and make my life easier and better, and I'll get to get a lot of things accomplished that I really want to get done. So I'm really looking forward to it. I really am.
All right. Well, Rich, thank you very much for taking your time tonight. I think I think you've got a big following of people that are really, really looking forward to what's going to be coming for the future.
Well, it's Danny, it's getting better. I put a lot of effort into it. It's getting better. I've been, with you on Mr. Top Step in your life. You've absolutely made my life easier there. I'm looking forward to what's coming in the next few months are going to be really incredible for what I have. I'm very, very excited about it.
All right. Well, listen, thank you very much, Rich. I think we lost sound, but
I'm still here.
Oh, okay. I couldn't hear you. But anyways, let's call it a night. You got work to do.
Really?
Great job.
And thank you everybody for coming. And if you want to sign up soon because the price is going up.
Okay. Thank you so much, Rich.
Thanks, Danny. Appreciate it.
Take care, everybody.
Thanks, everybody.